Welcome to Right on the Money, the weekly talk show with interviews you can use to help you maximize your money and optimize your financial future. Before moving forward with any of the ideas discussed on the show, always consult your financial advisor, insurance professional, or tax consultant. Looking for financial help or a second opinion? We can help you in your search. And now, your host of Right on the Money, syndicated financial columnist and money color commentator, Steve Savant.
Well, welcome back to Right on the Money, and we're talking about America's #1 retirement plan, Social Security. I am Steve Savant, syndicated financial columnist and money color commentator. In this segment, we're talking about the taxation of Social Security benefits with Tom Hegna, nationally recognized retirement speaker and best-selling author. Tom, they said they were never going to tax Social Security. I mean, I've looked it back in the Google history here, and they said they weren't going to tax this. Now, why are we talking about taxing Social Security benefits?
They're taxing them, and they tax, the tax rates are pretty high, too.
The exposure is huge. I don't understand it, and I don't think our seniors understand the impact of all the income that flows over to the provisional income test to see if your Social Security benefits are taxed.
Yeah, and let's kind of separate what we talked about in the last segment from this one.
Oh, good.
The last one, it was all earned income. It was salary and wages and bonuses and commissions. That's what counted towards the earnings test. This is the taxation. Now, what counts towards the taxation? I used to say everything, but it's not everything. There's a couple of things. Roth IRAs don't count. Income from life insurance doesn't count, but that's about it. So it's almost everything counts, okay? So your CD interest counts, your capital gains counts, your rental property counts, your farm income counts, all of your tax-free bond interest counts, which a lot of people don't know. That just shocks a lot of seniors, you know. So everything counts.
Okay,
your pension, half of your own Social Security benefits count.
Now, I noticed that there were 2 tiers of taxation. And of course, I have noticed in taxable event issues when we're looking at it, I'm in a high tax bracket. I got 85% of my benefits are now exposed to taxation because I'm in a high one. Then what happens? The father dies generally first. Now, mom doesn't have the same exemptions and deductions, so her tax bracket, even though she's not making any more, the actual exposure, it's a stealth tax for seniors, I have to say.
Yeah, it is. And so let's kind of get into it. I mean, when you receive your Social Security benefits, you may owe taxes on up to 85% of those Social Security benefits. The IRS adds together all kinds of income, and like I said, almost everything, like Roth IRAs don't count, life insurance benefits don't count, but there's not much else that doesn't count, okay? And they use your adjusted gross income plus all of your tax-free bond interest plus half of your Social Security benefits to come up with the number.
When I'm looking at this number, now I don't want to cry over spilt milk. We're getting taxed. I can complain about it all day long. It's not going to change anything. So when I'm looking at this, there's strategies to be had here. So I really need to think about what income can I defer while I'm taking this? How long can I stretch this out? And there's some elasticity in my thinking because I got a timeline. I'm sitting there. I know I'm going to be taking it no later than 70.
Right.
But I might have deferral income that I can push off into the future. I might be able to take some loans from maybe my home equity or my cash value life insurance policy, something to mitigate this time where I can at least bring this actual taxable income down.
Yes, there are some strategies, and let's talk about that. So again, they use your modified adjusted gross income plus all your tax-free bond interest plus half of your Social Security benefits. Now, here's the table, all right?
Well, wait a minute. Just before you go on, Tom, I'm sorry to say, go back to that.
Yep.
I have to say, most of Americans, until 7-8 years ago, were completely used to looking at when they say, what's your adjusted gross income? We go right down to the bottom of the page of the 1040. That number at the bottom of page 1 is our number. But today, there are 6 to 7 iterations of modified adjusted gross income, which is on the second page. And when you bring up, it's the modified adjusted gross income, not my adjusted gross income, that's a big wake-up call to most Americans. They have never heard this before, and they're starting to go, I thought it was AGI at the bottom of page 1. It's not. It's on this page, like you've said, modified adjusted gross income plus non-taxable interest.
Yeah, so almost everything counts. But here's the table I want you to understand. If you're single and you have less than $25,000 of income, or if you're married and have less than $32,000 of income, you will pay no tax on your Social Security benefits. But if you're rich and the government says you're rich, if you're single and you make between $25,000 and $34,000, or if you're married and you make between $32,000 and $44,000, well, now up to 50% of your Social Security benefits can be taxed.
Wait a minute, how can that possibly be rich? You just told me $44,000.
Steve, it gets better. If you're ultra rich, like Bill Gates rich, and the government says if you're single and you have income over $34,000, if you're married, you have income over $44,000. Well, now you're ultra rich, and up to 85% of your Social Security benefits will be taxed.
Let me get this straight. So my wife and I have over $44,000 coming in every year. Everything above that line is going to be exposed to 85% to whatever my tax bracket is.
It's even worse than that. 85% of your Social Security benefits are going to be added to your taxable income and will be taxed at your rate.
So whatever my effective tax bracket is, at 85%
of your benefits would be added in to count for income. Yeah, so
unbelievable.
So look, so let me give you a couple different examples. Let's say that there's somebody who retired from Motorola and they get, $75,000 a year in their pension. Is there anything I can do to help that person reduce or eliminate tax on their Social Security benefit? No. They're going to be paying tax on 85% of their Social Security benefits. But what if you got somebody who gets $1,000 a month from Social Security, $1,000 a month from pension, $1,000 a month from tax-free bonds, and $1,000 a month from capital gains? Well, you know what? We can get those people from 85% down to zero, simply by taking some of that tax-free bond interest and moving that into some deferred product, and moving some of the investments that gave them the capital gains into a deferred product. Even if they need income, they can use one of these income annuities that has an exclusion ratio, so you can get the same amount of income, but just not as much taxable. So, look. When I was a financial advisor for years, and I was out in East Mesa, where we used to call it Seizure World. It's Leisure World, but we call it Seizure World just kind of for fun. But there's a lot of old people out there, and guess what? I found a lot of middle-income seniors that bought tax-free bonds. Do you know why they bought tax-free bonds? Because they thought they were tax-free. They had no idea that their tax-free bonds were causing their Social Security to be taxed. And simply by moving that tax-free bond money over into either a deferred annuity or into a life insurance product or even into an income annuity, I could get them from paying tax on 85% of their Social Security benefits down to zero. And I did a lot of that. In fact, I never even knew about the Social Security taxation. I kind of lucked into it when I was a brand new advisor and I was working out there with all these senior citizens, and I started digging into this, and I found out there were people who had money in CDs. They didn't even touch their interest. They just left it in the bank. We moved that into a deferred annuity. There were people who had money in tax-free bonds, and it was causing them. So by using the products properly, I was able to save these people thousands and thousands of dollars on their Social Security taxation.
Wow, Tom, I'm telling you, taxation on Social Security is really a bear. And when we have strategies now to be able to mitigate some of this, and you need to look at that with your advisor. Well, that's all our time we have for our show this week. I want to thank Tom Hagen for being my guest. But before I go, remember what the good Reverend John Wesley once said: make all you can, give all you can, save all you can. I'm Steve Savant. See you next week right here on Right on the Money.
For more information on this week's money topics, just go to our website at www.rightonthemoneyshow.com and follow Steve's daily postings on Facebook, Twitter, and LinkedIn. When it comes to retirement, money management, small business, insurance coverage, college funding, or budgeting, we have the interviews you can use.